Hey everybody, SmallCapSteve coming at you guys live on SmallCapSteve Live, produced by SmallCapSteve, written by SmallCapSteve, but brought to you on the Deep Dive Network. Today we got some big news going on in the small cap world, ranging from Digimax to Sundial announced the financing. Hill Street, remember Hill Street? They've announced that they're going to do a $2.5 million financing. And we're gonna get into all this Citron stuff. It's have to talk about what's happening with Andrew Left, all this stuff that keeps going. The drama keeps unfolding with all the GameStop stuff and Wall Street bets. So we're gonna get into all that and more. So buckle up, get ready. Here we go. Jason, sweet Jason, how do you do?
Well, it is Friday at noon, and I am absolutely exhausted from this week.
It's been a wild week. Like I can't sleep at night. There's just so much that you got to comprehend, and I'm still trying to figure out what the appropriate take on all this Robinhood stuff is. I got to be honest with you, I don't know. I know that if I were a retail investor who's new to investing who signed up for Robinhood, I'd be fucking pissed. But we're hearing like the Webull guys talking. We got Vlad from Robinhood talking, and they all basically seem like they're talking out of both sides of their mouth. We know that there's a giant firm that owns Robinhood that gets access to the data in the morning time so that they can front run, and now they're getting hurt and they're investing in these other funds. So there's just so much stuff that we really have to examine, and I don't know really what to make of it all. What's sort of your take on everything? Like the information's changing hourly.
Yeah, it's changing hourly. I mean, Andrew Left was the big news this morning. I had my head down most of the morning, so I'm myself a bit behind because right now things are going, just like you said, so fast that it's hard to keep up. I saw a tweet, Andrew Left, saying he's not issuing short reports anymore. Now, he did not say he's not shorting anymore, but he said he's not issuing short reports. And, I mean, that's largely because he got screwed so bad with the whole GME thing, right? I mean, I feel like Citron Research used to put out high quality work, and the last two years.
Let's take a minute and let me actually play. And I'm sorry for interrupting you, but let's.
No, go for it.
Let's play this for our audience here. Let's see if it lets me share audio. Give me a thumbs up on your screen there if you can hear it there, Jay.
Andrew Left at Citron Research. 20 years ago, I started Citron with the intention of protecting the individual against Wall Street, against the frauds and the stock promotions that were just all over. When I started it, everyone used to say, can you just write whatever you want to write online and not be a registered brokerage firm and not be Merrill Lynch at the time? I said, sure, it's freedom of speech in this country, and if I'm telling the truth, I'm just going to write it. And for the first 15 years of existence, not CNBC or the Wall Street Journal even wanted to note the fact that we existed. Even the fact while we uncovered more fraud than any non-governmental agency out there. We helped bring down the drug pricing in this country against the better interest of the hedge funds. And we're proud of the work that we've done. But now, after 20 years, we noticed something. Where we started Citron was to be against the establishment. We've actually become the establishment. And we've done this whole thing without ever hiding from lawsuits, without ever hiding behind a pseudonym. But it's completely now lost its focus. So as of today, Citron Research will no longer be publishing what can be considered as short-selling reports. The Citron narrative is going to change and have a pivot. What gets lost in the whole Citron Research world is the fact that last year, the performance of the Citron Fund and Citron Research on our long recommendations was up 121% average from recommendation to high point of stocks. And that was in 2020. We want to bring investors stocks that they can make 5, 10 times their money on, but at the same time have strong management teams, ethical business practices, business models that are forward-thinking, socially conscious. And we're going to bring that to the individuals. These companies can use the support of a whole new generation of shareholders that have an appetite to buy stocks. If you choose to buy GameStop here, it's caveat emptor. You know what we think about their business model? It's on you. Too much has already been written. But until then, we'll have our first story ready on Monday. We want everyone to breathe, smile. We're excited for the next 10, 20 years of Citron. Hopefully, we can put our experience to add some sanity and, most of all, some kindness back in this market. Cautious investing to all, and have a great weekend.
Cautious investing to all. This is, you know, I don't know exactly what to make of this. I think that he's feeling a lot of heat right now that, you know, everybody's after short sellers. We've seen it personally. People accuse us of being short sellers all the time just for trying to write commentary on financial statements. And
you
get this a lot. People have called you a short seller for 3-4 years, so you probably can this is probably hits home a little bit. What's happening?
So I mean, my perspective on it. I mean, I've been called a short seller countless times. I've never short a share in my life. My personal account, I don't deal with margin or anything. I'm straight cash because I'm investing in small caps. To me, that's risk enough. I don't need to go and grab shares on margin on top of that. That's just my personal risk profile. But I mean, I don't short because while I may think many, many companies out there are pure trash, I know where sentiment lies, right? And I mean, Andrew left right now saying he's done issuing short reports. That's largely a function of where we are in the cycle in my mind. Right now, any short seller issues a report and they're just getting screwed in the wrong way. They can be 110% right. GameStop is a perfect example. Fundamentally, where does it sit? Not in a good spot, right? Especially given the pandemic and everything else. I didn't read Andrew's report on it, but I'm willing to bet I agree with the majority of the points made within it. The problem is we're in the cycle where money is cheap for everyone. There's been money literally issued to millions of people in the U.S. who now have these Robinhood accounts or whatever other discount brokerage they use, and they're pissed off about their current situation. And if they can screw the shorts, then they're going to do what they can, right? I mean, have I enjoyed watching the last few days? Absolutely. It's something that to me is so unique and hasn't exactly happened before that the events this past week are going to be talked about for generations. And I mean, in 20 years, it's going to be, remember when the retail investors did what they did this week, right?
This is the thing that I think a lot of people miss about this is that this is what quants do for a living, and we hear about it all the time. They actually monitor social media, they monitor Twitter, they monitor Facebook, they monitor Reddit, they monitor all these things to have a sense of where the retail money's going. I actually happen to be lucky enough to chat with somebody who's very well connected with some pretty high, big time money managers. And he says that they pay for data of what's happening on social media so that they can try to front run retail. So this isn't just as simple as David versus Goliath, because there's a lot of Goliath that was on the long side too, that when they saw all this, Reddit traction, they hopped in on the long side. So if you think that this is just little guy versus big guy, that's not how markets work. It's not that simple. I understand why everybody's pissed. You ought to be pissed, because like the part that I struggle with is that you could still trade everything else, but you couldn't trade GameStop, and I think it was AMC Theaters were the two.
And then there was like Nokia, BlackBerry, Sundial that were limited at certain exchanges as well. I think the most interesting part, though, is I'm highly skeptical as to how much Reddit actually contributed to things here. Think of all the money that hedge funds have behind them. I think really what happened is all this sentiment came in, and it looked like it was retail doing this. And there's this great story behind it, so the media picked up on it. CNBC, Forbes, Barron's, everyone. Oh man, the retail is screwing over the hedge funds. I'm willing to bet that 50% of the upwards move was probably other hedge funds, if not more. But they rode the wave with sentiment, and it helped push it. I don't think Robinhood is nearly as powerful. Sorry, Reddit is nearly as powerful as we think, other than just general sentiment. I don't think it's actually their money that moves things.
I've seen these things happen, and I'm not one of those people who likes to take credit for a stock moving, but I've seen there's, and I'm not giving myself credit for any of these examples, although I think in some cases I may have started a movement on a stock on Twitter. But sometimes somebody just brings a good trade idea to the attention of a social media platform, and then other people who actually have significant capital go, hey, that's a really good trade idea, I'm going to hop in. And then a few other people notice what's happening, and the next thing you know, you started a movement. And that's sort of what happened. So it's easy to say that like Wall Street Bets wasn't that big, but I also got to tell you that I got a lot of friends who don't know anything about stocks. They know nothing. Like if you ask them about what is market cap, they go, what the fuck are you talking about? And now they're all messaging me about GameStop, and it's like,
absolutely. I live in a town of 400 people, and yesterday at the skating rink, people were talking about GameStop. I've never before have I even believed that they knew anything about the stock market. Not to cut them down, but that's just never been a discussion around here, right? So when I hear that, it tells me how significant this was, but also the job that media has had behind it, right? I mean, to me, one perfect example is silver. Silver yesterday moved, 5-6%. Today it moved up as much as 6%. Do you know how large the silver market is and how hard it is to actually move that? That's not retail doing it. That's hedge funds going on the back of Wall Street Bets, who has been pushing the silver narrative and pushing things further. Now, I'm all for it. I'm extremely long silver, physical, paper, and equities related. So, I mean, I'm celebrating it, but I'm also not naive enough to think that's just solely Wall Street Bets members pushing the market here.
Mm-hmm. I'm going to pull up the chart here, but give me 1 second. Let's pull this up. This is the problem with trying to do all this live on the air. Here we go. So what's like, there's a lot of banks that are short silver. That's sort of the narrative that we're all hearing. And now the idea is, a lot of people are saying this is where I'm kind of struggling with this whole like thesis and movement, is that in order to really pop a precious metal like gold or silver, isn't there going to have to be some sort of like mechanism for retail investors to ask for delivery?
Sorry, just 1 second there. You've actually got the wrong silver chart up.
Okay.
Right now it's at 27.22 US. I believe you got the wrong contract selected.
Okay.
Which about the December 2020 contract.
Send me the link of which one you want up.
I'm just on TradingView. That's all I ever use. Okay. XAG USD.
TradingView. I was a really big fan of Y charts before we started this show. What's the symbol?
XAG USD.
AGUSD. Okay, got it.
You've got it on a different window there, buddy. Oh, there you go.
There we go. Let me pull that. Close that. Okay, so you can see there. That's there's the current price of silver. So what do you think the likelihood of a squeeze here is?
Well, it's moved up significantly. 2 days ago, I'm looking here. We had a low of $24.70 an ounce, and right now it's at $27.23, and it's come down a bit. Today we're up just under 3%. Midday we typically drop, and then I'm expecting a bit of a rally towards end of day. It's just how market dynamics seem to work lately, especially in the commodities markets. I would love a strong close today and for us to see continuation next week.
Yeah.
Sorry, I got distracted there. Our longtime supporter, Michael Den. I'm sorry, it's Den or Dane. I don't know.
Michael always gets caught up in the fundamentals. Here it is, Mr. Dane. I don't see any reason why silver should go up. Supply seems to really exceed demand, and it's look at GameStop, Mr. Dane. That's my suggestion. Is if we pull up GameStop here, and let's take a look here at these fundamentals. Is got a company, if they burned $200 million in operating cash flow last quarter, negative EBITDA, but they're trading at a $13 billion market cap, sorry, $23 billion market cap, $13 billion enterprise value. Makes no sense why anybody would want to buy this. So that
is it back to 335?
It was as of this morning. That number is not always perfectly updated.
It's actually higher. It's 346.
Yes, that's 346 on.
It dropped so hard yesterday.
So again, but this isn't, and this is what people struggle with, right? Is that this isn't about valuations. This isn't about trying to come up with a fundamental reason for why any of these things make sense. This is about trading. And it's funny. Notice how when a fucking retail investor starts trading, what do we call it? We call it gamification. They're not trading. They're playing a game. And then here I look at it with everything that's going on with all these hedge funds, high net worth individuals who are trading. No, they're trading. They're quants. These are sophisticated investors.
I think the whole argument for the whole silver thing comes down to paper ounces versus physical ounces. That's largely missed by a lot of the market itself. I mean, it's just like gold. There's tons of paper products out there relative to the amount of physical.
That's why you have to have a mechanism for all of these retail investors to start asking for delivery. Because when the system actually finds out that there's not enough gold and silver to satisfy all these contracts, you can almost create a Wall Street Bets event where the clearinghouses are just like, we don't know what to fucking do.
Yeah, because I mean, how can you deny someone from settling in physical? Right. Yeah. So I mean, if I want physical, get me my physical. I paid for it. It's your problem, not mine.
Yeah. We got a comment here from B Positive. Donald Trump picture over 100% short is the reason. I agree. This is a trade setup. When you find a lot of shorts, everybody can work together and try to squeeze them. And that's what the thesis is. And that's what sort of gets the rally going.
I mean, personally, the best thing that could happen to something like silver or gold in my mind is that we see a massive squeeze because people want to settle in physical or whatever the case may be, to the point that legislation goes in limiting the amount of paper that exists out there for these metals, right? And then we can get an actual semblance of the actual valuation of these metals rather than some mythical figure based on there supposedly being 10,000 more ounces than there is for that single ounce that paper is based on, right? That's a very poor explanation, but I think you get the genesis of what I'm getting at there.
Mm-hmm. Yeah, no, look, I get it. I don't know what's going to happen with Citron and all these short sellers. I think that they do serve a purpose in the market. They keep operators really, honest, and that's an important part of this whole market, right? Is having companies know that if they mess around too much, they're going to get called out. And I think shorts are good, but we're in such a raging bull market that it's probably good for them to go into a little hibernation period and sort of just wait for this bull market to end. And then, we've seen this happen in tons of cycles where they come back on the down end.
I think the best way for someone like Andrew Left or any other short seller out there to make money right now, and now, to be clear, I don't know the legalities of doing something like this, but issue a short report on a company that you're actually extremely freaking long and just watch it go up, right? Because people will think they're squeezing someone, and instead they'll just buy up the equity.
Mm-hmm. Yeah.
Right? Like had Andrew Left been long GameStop while pretending to be short, he would have made a freaking killing.
Mm-hmm. Yeah, I know that's like, and there was certainly points where I was looking at this and thinking, is Andrew Left going to, because these guys
they're not dumb by any stretch, right?
and like in general, who knows? I don't really even know how Citron works. Is Citron just, a corporation that's effectively the face of a giant short selling fund, which is something that we often hear? Or like, is he like a legitimate, whale who has a lot of cash that can actually, so like perhaps, how much risk is there in it for Andrew? Did he see his book get lit up? And none of us really know these things. Like we only know what he tells us. And
yeah, there's only two people that actually know for certain. One, Andrew Left, and two, Andrew Left's broker. Beyond that, who knows?
Yeah. So that's certainly a very interesting point, and something, who really knows. Let's get into the small cap news today very quickly here. Digimax, a little Canadian blockchain company, they put out news. What can you tell me here, Jay?
So this was just a quick little article this morning, and I'll be honest, the details escape me slightly. Basically, through their subsidiary Data Navi, they have a proprietary software called PPI Hiring Solutions, and it's just used to within the recruitment process. They signed a deal with Shepherd Search Group, and this tech will effectively be used to assist in recruitment and HR consulting globally. This company has quite a large footprint, 10 different brands, 4 different continents, 16 different niche industries that it works in. So there's no financial details provided for the agreement, but given the size of Shepherd, I imagine it's a decent little deal for this company.
Mm-hmm. Okay, let's move on to the next news release here very quickly. Hill Street Beverages. I didn't even know these guys were still around. They announced a $2.5 million financing. What can you tell me here?
So Hill Street is a name that's kind of been in and out of the cannabis space itself. Originally, they were supposed to buy one plant, which is not one plant. It's a cannabis grower here in Regina, Saskatchewan. They're supposed to buy them. Deal fell through for a number of reasons. This morning they announced that they have a new executive chairman, and effectively at the bottom of the release they tucked in that they're doing a financing. Financing sees units sold at 8 cents with an 11-cent full warrant. Initial commitments of $2.5 million. They're looking to raise a bit more. We'll see where it ends up. But yeah, I was kind of surprised to see this name still going. I don't know the financial situation of Hill Street overall. I know they did just buy a portion of Lexaria Biosciences. They bought one subsidiary related to cannabis there. So they are intending to get back into intending to produce cannabis drinks. I think they have a deal with Peak Processing, but I could be wrong on that.
Okay, well, let's move on to the next one. We don't need to spend too much time on each of these. But Sundial, this one's actually relevant. Let's talk about Sundial quickly.
So Sundial is absolutely relevant. They yesterday saw, I can't remember what brokerage house it was, but certain trading was limited in it because effectively it's another short squeeze situation. This morning they announced that they're conducting a 100 million registered offering, and my suspicion is it's largely being filled by all those firms that were short who are now trying to cover without getting bent over. Financing is being conducted at 80 cents a share. They've got Series A and Series B units being sold. Series B effectively convert to Series A, and Series A essentially has a 3-year warrant, exercise price of 5-year warrant, exercise price of 80 cents per share US. Looking to raise 100 million. This is a name yesterday that I outlined is actually doing quite well. Last June, they were on the brink of insolvency, and they managed to sell off some UK-based assets and conduct multiple at-the-market financings over the last few months, and they've been doing well financially since. Not necessarily generating income from their operations, but they've managed to go to the market and get just a boatload of money. And this is just another instance.
Yeah, this is this was a very, very ugly looking insider self-dealing type stuff that went on when this thing went public. That was like, they probably could have just done it properly with a clean cap structure, but it was clearly one of those optic things where they were trying to move stuff around to make it look like it wasn't too egregious. But in the end, it just really put a bad taste in investors' mouths. So that's part of it. The other part is that they also took this thing public on the NASDAQ during the downside. And now, look, this is become a Wall Street bets pick, which, like, forget fundamentals. It doesn't fucking matter. All that matters is that there's buying in the stock because people who aren't that sophisticated see it as a trade, and they're going to keep buying it. You see it with like that Zach Morris account on Twitter. When he tweets about, he's getting like 500 likes. And I think that those are mostly real. I don't think he's like paying for some Twitter service. So we see it here. They raised $100 million. I thought this company was done. They're now paying off their debt. They're putting cash on the balance sheet. And I assume that they're getting ready for when they can actually do some real things in the U.S.
Yeah, and I mean, I'll add to it. I'm extremely impressed this thing was able to squeeze at all. Its share structure is just atrocious. I imagine right now they're well over 1 billion shares, especially with this latest financing. I think they're at something like 919 million previously. But I mean, I don't know how they did it, but good on them for doing it.
Mm-hmm. Yeah, okay. What else is going on here? I got Siegfried Egert from Grizzly Research. Steve, my man, Siggy, I see you. I hope you're staying safe during this time where short sellers are hiding. They've gotten a hit back under their rocks. This too shall pass, and I'm sure that there will be a time where guys like you who do great research are able to continue to expose bad deals. What's General Motors? This isn't really a small cap name, but we did an article on it. They're talking about 2035 zero emission free vehicles. Do you recall what happened with the story here? Or is there
I'm pulling it up as you can hear my...
Okay, so following California's recently introduced legislation that will ban the sale of new combustion engine vehicles by 2035, a barrage of automakers have taken the market signal as an ideal time to revamp and speed up their electrification plans. Following California's change in legislation, General Motors announced it has withdrawn from a lawsuit brought forth by the Trump administration that challenges the state's right to set its own emissions regulations. Given that California is one of GM's largest markets, the state emission reducing goals have instead ignited the automaker's ambitions to align itself with greener policies, as well as a head start in the growing EV market. So what's kind of odd about this, actually, and I've been long GM in the past. It's, I think that the cruise automation side of the business makes it a very particularly interesting name. Which is almost equal to like half the market cap now, their investment in that one subsidiary that's arguably the top autonomous driving technology there is. I think that that's going to become an interesting story should GM suddenly be the first company to have driverless taxi cabs in, say, New York City. That I think that that's going to really spark a lot of excitement in the name. And this is kind of like what we're talking about with Mr. Kevin Shea yesterday. This is not... this idea that Tesla is the best at making EVs. Well, GM's been around for what, 100 years, over 100 years?
Close to 100 years.
Close to 100 years. And they have processes down pat. I mean, my mom worked at GM when I was a kid. My grandpa, who I never met, worked at GM. I worked at GM feeder plants when I was in university going through school. I'll tell you something. Like when they commit to something, there's a whole process in place where they've spent decades perfecting all their standards and making sure that everything gets done properly and gets done right. If I were to buy a $100,000 vehicle, I don't know how much I'd want to buy a Tesla, even though I mostly hear positive things. I do know that with the big auto companies, they've just when they come, they're going to come hard and they're going to come heavy. And it's actually gonna be pretty fun in 5 years when you go to buy a new car, when there's gonna be 50 plus.
I'll be honest. If I were buying $100,000 vehicle and it had to be electric, it'd probably be a Porsche Taycan. Just a beautiful car inside and out. But General Motors, I don't know if you have the chart handy there. This thing has gone absolutely bonkers in the last 12 months. Hit a low of like $14 during the March crash, and right now it's at $50. And I mean, it's pretty well a straight line up. I kick myself because you and me had this discussion, Steve, where we should be buying options. It was probably around last March, maybe April. And I didn't get the chance to, or I didn't get around to actually buying options. I don't know if you did, but boy, oh boy, has this thing gone wild.
I was buying them at like pennies, and now most of these options that are long dated call options are now way fucking in like worth dollars, and you could have bought them for pennies over the last year. Because the thing about GM that people don't understand is there's like it's got like since it got reinvented after 2008, there's been no volatility in the stock. So the options are like the implied volatility is very low, means that you can buy these options way out of the money really cheap. Volatility's now picked up, and it makes it interesting. The challenge is that, and I know that this is something that a lot of people don't really consider when they look at Tesla, but when you actually break down the enterprise values of these things, GM, I think, is still worth more than Tesla. Don't quote me on that. Why don't I look that up?
I'd be highly skeptical of that. I could be wrong, absolutely, but I'd be skeptical of that being true.
Let's see here. Enterprise values. Cool. I better pull up my screen.
Just
enterprise values. Oh, wait. Okay.
Not even comparable.
Oh, geez.
That's embarrassing.
Yeah. Well, I didn't realize. I guess I didn't realize how much Tesla has ran.
Oh yeah, Tesla is
Tesla's almost $1 trillion market cap.
Tesla is wild. After doing a 4-to-1 split, they've now ran up to pretty well close to where they were prior to the split. To me, Tesla was another options game similar to something like GameStop. It just occurred slightly less rapidly.
Mm-hmm. I tweeted this out, and I think you thought it was funny the other day that I'm surprised that GameStop was apparently the one that broke Robinhood, but it sounds like the same shit's been going on with Tesla for like a year, where all these Robinhood traders are buying options.
Yeah, and I mean, there's long been suspicions. I mean, QTR, Quote the Raven on Twitter, has long been pointing this out in terms of Tesla specifically. And now it just seems to me, GME was almost like a blow-off top in terms of this options gamification.
Mm-hmm.
Right? I mean...
Yeah. Well, look, it's... What's more ridiculous, right? GameStop at a $20 billion market cap, or Tesla at a $765 billion market cap? What's more ridiculous? I don't know the answer to that.
I know the answer, but I'm not going to say anything because I know I'm going to get roasted by every fanboy that exists. But here's what I say. Compare sales in Europe, where a certain company has said that there's so much growth, building a facility in Germany, even though demand is actually on the decline for their products. There's every week it seems, there's new variants on the market of electric vehicles. And when was the last time a model refresh was really done for any of their vehicles, right? I mean, do you want to buy the vehicle that is brand new this year, such as a Porsche Taycan, or do you want to buy the Model S that's been out for 5, 6 years now with no real change, right? And then, I mean, in North America, sure, I think Tesla still sells the most electric vehicles, but once GM and Ford really get into things, they just now started putting out new versions of their vehicles. I don't even think it's going to be a competition.
So a lot of people have this assumption that vehicles in, let's say 20 years are going to be like commodities, where everybody's just going to use, ride sharing services, and they're going to get to some sort of autonomous vehicle. And there'll still be, don't get me wrong, there'll still be people who drive and they like their vehicles, but that will be the mass market. These things turn into commodities. At which point, like, should it go down that road, you're going to, like, all these things are just manufacturers, low margin manufacturers. Where's the what's the argument for Tesla to have $1 trillion market cap?
Yeah, and I mean, I'll also add to that. Go and Google the current rankings for autonomous vehicle technology,
and that's exactly like what I was getting at with
Tesla's like number 21 on the list. Like they aren't even a competitor when it comes to this. Yet they've got the most advanced technology in production vehicles. Now, I don't know how they have not been the subject of endless lawsuits at this point. There's countless examples of this technology, which is effectively like an enhanced cruise control. You've got people sleeping in them. You've got people not even sitting in a driver's seat driving down California highways. Like 2 years ago, when I was in California and I saw a Tesla, I was more alert than ever, just because you never know if these people are actually even paying attention to anything. And the tech is not what people think. I think this past week, there was a video of a Tesla. It was a test video. A Tesla was following a car. The car in front changed lanes, but there was another car right there, and it plowed right into it. Right? Because the technology is not what people think it is.
Yeah,
so I think it's Google that's actually in the number one position with Waymo, I believe it is.
Google is Waymo. Yeah, Google is Waymo, and then I haven't looked at it in like a year. I'm trying to find it right now. Some of these lists that have been compiled where it ranks them, but generally speaking, it's Google and Cruise Automation, which is GM, that are generally neck and neck at the top of the list. So that's part of what I find really interesting about General Motors that I think a lot of people miss, is that they do own, I think at this point, like around 80% or something like that of Cruise Automation, which is like going to be the story. And we've seen some of the valuations that they try to put on it, that like if they end up penetrating the taxi market, and then I'd have to pull up the full stats, but the valuation alone on being one of the leaders in autonomous driving, it's probably worth $200 billion in valuation minimum, assuming that you're able to get like a reasonable clip on each mile driven. So these stats came out like about these rankings and reports came out about 2 years ago. So that's clearly, I assume that's clearly part of what people are valuing Tesla on, is that they assume that they're going to be one of the first ones to pull this off, because otherwise I don't really understand. I just don't really get what the Tesla thesis is.
Yeah, I agree completely. And one thing I will say that's in favor of General Motors, at least compared to Waymo, I've got a Google phone, I've got a Google browser. Google knows so much about me. The last thing I want to do is now go get a Google vehicle that literally is able to easily track me on everything. Call me a conspiracy theorist, but I just don't like one firm having literally every detail about my life like that, right?
Yeah,
I mean,
that's fair.
And I think the draw to General Motors in that instance would actually be quite large, even from the everyday consumer who doesn't want to sound like a conspiracy theorist, but they'd still rather not have Google everything like that at the point where it's just one entity ruling their life.
Mm-hmm. Yeah. Okay, so let's close up here. It's a Friday. It's been last week was a busy week. This week's just been a confusing week, because I think both you and I have been trying to comprehend everything that's happening with.
Yeah, I mean,
this isn't as black and white as, like, we got a lot of these guys that are coming out and they're trying to be dead set of this is wrong, like Dave Portnoy and stuff, and like obviously like it's engaging and exciting when somebody takes a take like that, but it's not really an adult and responsible way of looking at things, because there's so much going on with the mechanics of it that they just didn't have they didn't have the they didn't meet the capital requirements to allow for more purchases of these equities, is what we're told.
Yeah, I mean, all I'm going to say is when AOC and Donald Trump Jr. agree on something, it's a bit of a rough week. And I mean, then there's also all kinds of the usual suspects in the market out there. You got, I think his name's Chamath. He's, I assume he's a billionaire at this point, hedge fund manager type. He runs a bunch of SPACs. He was in on the GME thing at like $1 or 118, sorry, and pushing it further when he's trying to appeal to this retail investor who likely he's assuming are going to go into SPACs after, trying to come off as this good guy. When really we all we should all understand that he's just here to make money like everyone else, right? And he's using retail to that point. So, I mean, there's all kinds of dynamics like that. Even Elon Musk was getting in on it. We had all kinds of billionaire hedge funds or billionaires from hedge funds screaming, going, this isn't right. And, it's just been a weird week. Small cap sold off for a few days as people were taking money out of those and just piling it into these hot plays. It's just been a mess of a week, and I'm ready for it to be over.
Yeah, it's the funny thing is that we got all these billionaires that are literally talking out of both sides of their mouth. 1 minute it's this is the worst. The retail investors are all right. I'm a man of the people. Fuck you, institutions. And then you got an institutional guy saying that. And the valuation makes no sense. It's just. I think that this is a lot more complicated than what everybody wants it to be, and they're using it as a chance to gain more traction. And we know that, if they have hearings in Congress over this, we know exactly what's going to happen.
Actually, QTR put out a great tweet on this. If you want to pull it up quickly, I think you retweeted it, and that's how I shared or how I found it. But
yeah, and it really, honestly, it hits the nail on the head here, because we know how these things will play out. Let me look at my own feed here, because I don't tweet as much as he does.
That's an understatement.
I thought I retweeted it here. Let me see if I can find this tweet here. Here it is. Let me pull this up. And this nails it. This nails it. This is exactly what's going to happen. We're going to have, right? It's just happening on Twitter for fuck's sake. It's just everybody wants to have a hot take and prove that they are the biggest of the people. And what's going to end up happening is we're going to have a bunch of people who don't understand any of this shit. They're going to be giving questions for people they trust that tell them what to ask. That's going to be talking points so that they get their 2-minute soundbite that hopefully gets shared on CNN and Fox News and all the media circus. So it shows that they stood up. They stood up for the people. And it's just going to be like, remember when Zuckerberg got quizzed and Zuckerberg just totally dummied Congress?
Well, half of Congress didn't even understand. Look at the average age of Congress. Isn't it something like 69.2 years? At least that's what it was last year. They don't even understand what the internet is, let alone how hedge funds operate.
It's this, this stuff is always so complicated, and I understand that everybody wants it to be black and white, and they want simple answers and simple perceptions, but it's really, my understanding is that Robinhood, they didn't have the ability to take on more long positions in GameStop, or they were getting near a point where they were going to run out, so they had to halt it for a while and let their clearinghouse catch up.
Yeah, I think the most interesting aspect of that, and terms of service, Kyle Clark on Twitter has pointed this out a few times, but I don't know how well some of these terms of services will hold up. Because, you can put anything in terms of service, doesn't mean it's legal to have it in there, right? But, at the end of the day, a lot of these accounts were liquidated. Now, the question is were those on margin, or were they just cash accounts? Because that does make a difference. But, if I was forced sold at 120 or 130, whatever it was, and then after this thing had dropped from 300, and then it goes right back to 300, there's an issue there, right? Like it. The problem is good luck getting this settled in court. All these people that lost paper gains or whatever, they're never going to get their money back. Class action lawsuits never end up in the favor of the people that the class action's for. It just ends up in the favor of lawyers and lawyers only. Right? Like, will things change? Sure, but it's probably not going to be a good thing overall because, like we said, people in Congress don't understand the markets or how they work.
Yeah, it's like you got to understand. I sometimes we refrain from saying these things because if you say something often enough, it gets tiring, right? But when you are getting a product or service for free, then you are the product. The customer in this case was the Citadel, and which is effectively is Citadel a fund?
It's a massive fund, is my understanding. I'm going to do a plug here, actually. Our writer, Braden Mackey, yesterday put out an article on GameStop. It was it basically talked about, we don't even know how realistic it is that the hedge that Melvin actually needed the cash infusion, and how much of it was just a ploy to get people to try to squeeze things further while Citadel just made bank on it, right? Scroll down to the end there. He's got a theoretical conversation, and it's just great, right near the end. So for all we know, Cohen and Griffin, who are principals of 7.72 and Citadel, could have called Gabriel Plotkin over at Melvin to ask what the hell's going on over there, and the conversation goes something like, "What the hell's going on over there, Gabe? They say you got squeezed out of this GME trade." Nah, man, it ain't like that at all. We lost on some puts, but we're out of it now. And then Cohen cuts in, no, take on $1.35 billion from each of us and tell the press that the retail traders blew you up. Lean on the ruined hedge fund thing. They'll love it. And I think this is like, I had not considered this previously, and I'll give Braden full credit for coming up with this. This is a very real situation that could have happened, because then Citadel goes along and they, like I said, they just ride the wave and make money. Now, who knows what truly happened here? And I suspect, well, I know that you and me and the majority of people will never actually know what happened here, right? It's like I said, hedge funds made off well on this.
Yeah, well, some of them. I'm sure I'm certain that some hedge funds have gotten blown up in all this, right? Like,
yeah, I'm sure they did, but I imagine more made than more lost.
You're short and you haven't, done the proper coverage on, and that's sort of why you want to buy. My understanding is if you're going to take a big short position and there's puts available, you want to grab some of them. It's going to reduce your return, but it's going to help reduce some of the risk. So I'm sure that some hedge funds didn't do any of that kind of stuff, and they just went straight up short, and they got caught in a bull market. That's going to happen in any bull market. But that's it's a very great take by Braden, and he's also, by the way, been just hitting it out of the park with
he's been pounding it out this week,
driving so much traffic. He's doing a great job, and we're very grateful to have him on the staff. He's I know he rubs a lot of people the wrong way, but like that guy
got great insight.
He's one of the best writers out there, and I hope people take a chance to watch some of his stuff or read some of his stuff. Sorry. So let's wrap it up. It's a Friday. I appreciate everybody joining us. Jay, very quickly, what's going on in the dive, and give them the disclaimer too.
So on the dive this weekend, we've got 3 different reports coming out from Jim McFadden on a variety of sectors. As always, he does great work, and I can't wait to release them. It's great weekend content. Additionally, we've also got a report on Plug Power coming out by Braden. I think I'm going to put it out tomorrow morning. And the typical great stuff in terms of macro from Hermina Paul. This afternoon, we have Frank Holmes from U.S. Global Partners, as well as the interim CEO and current executive chairman of Hive Blockchain on the Daily Dive. That'll be out in about 40 minutes here. He talks commodities, Bitcoin, crypto, Ethereum, regulations surrounding all of it, and his outlook for commodities in general as we head into this green revolution. On top of that, some great analyst notes from young Justin. This afternoon. And as always, we're here for entertainment only. We have strong opinions, but that's all they are. Neither you, Steve, nor myself hold any financial designations, licenses, etc. On top of that, enjoy the content this weekend. There's a lot coming.
Okay, perfect. And look, we've had this week's been fun. We're getting a lot more young people engaged in the markets, and I hope that continues. And this is as all the money printing that's going on and interest rates as low as they are, it's clear that everybody's out there. They're searching for yield. For guys like us who love small caps, micro caps, it's probably going to be a lucrative time. There's clearly a lot of bad actors out there that you want to watch out for, because in the small cap and micro cap world, a lot of these deals aren't even real. So we're going to continue to cover it and do our best to provide you as our listeners, our watchers, with coverage that we think is relevant for the Canadian junior markets and small cap space. So please like and subscribe, connect with us. We're happy to cover any of the topics you want us to cover. We're new to this. It took us a couple of years to grow the balls to even come out here and put our faces on camera. We finally did it, and we're hoping that we can provide value to our audience. So we sincerely appreciate everybody hopping on. Jay's got a point there.
I just want to do a great shout out to our production team. They have knocked it out of the park this week with a number of excellent productions. They're out over in the Philippines. They're doing all kinds of crazy hours so that they can accommodate us. And they've got some great guests lined up for next week.
Yeah, it's just we're so lucky to have them, and we're so lucky to have our whole staff. Things are really rocking for us. We're really hitting our stride here, sort of as a media platform called The Deep Dive. And I hope you all continue to join us, subscribe, and let us know how we could serve you guys, because at the end of the day, we're here to serve the audience is ultimately what we're trying to do as a media platform. So let us know, like and subscribe, and we will see you guys Monday with a hot new episode. I'm sure there's going to be lots of fireworks over the weekend. So get ready to tune in, and have a great weekend, everybody.